Okay, so today we're going to record Terra Lake Heights, presented by Terra Equity Group, and is it ERBE Wealth or RBE Wealth or something? It's ERBE Wealth. ERBE Wealth. Again, it's exclusive to 506c accredited investors. So we've done similar things before, right, in our title slide. Disclaimer is the same, nothing's changed there. Financial disclaimer is the same, nothing's changed there. Start talking about the investment opportunity, about the property and the business plan. So, oh, we have an actual address, cool. So it's located in Tallahassee, 18.5 million acquisition cost by investors, right? Typical 65-35 split.
18.525.
5 to 5, 18.5 to 5, yep. Total raise for us is 7.5 million, minimum investment 100,000, holding times 3 to 5 years, 160 units, very profitable market. Do we want to talk about the fact that we've had a lot of good success in Tallahassee here, or do you have it later in some stuff? Oh, it is? Okay.
We should talk about that Tallahassee has been overlooked from the regular market. Tallahassee is like they were focused on the student housing, but now that eliminated the regular rental market.
Oh, so there's a lot of potential.
Conventional. And plus the Amazon facility is coming there. So there's one of the biggest Amazon facility coming 5 miles away, where they're going to be hiring at least 2,500 to 3,000 people.
Is that in the debt later or no?
We may want to add to see that, article and media.
We can do it when we advertise it,
right?
Like attach the thing with the article or something. Okay, so 160 unit value add play. We say desirable unit mix because of the studios, the 1 bedroom, 2 bedroom. Okay, is that because it's like a lot of diversity, like it's a fit for everyone, like families to single people or something? Or?
Well, that and the 4 bedroom is good for families.
Mm-hmm.
Generally, you would get that with single family homes, which go for a lot more higher rent than compared to an apartment. So ideal for families that are starting out, especially in Tallahassee, you have over 50% of the population that is renting rather than owning. So it's a good mix to have.
But it's not in Tallahassee, nationwide in the whole USA, it's a 50% rental population.
That's crazy.
But another thing is like we have what they call, because of the COVID, even the husband and wife, they're working from home, they can utilize that with those extra room at the office, even though they don't have a need, so they don't have to go out and get an office building or somewhere, but they can still work from home and still, so that also gives that.
Without the expenses of owning a home and the maintenance, or even renting a home and maintenance, that is required.
So we talk about extensive renovations done. Do we have some examples? 2019 McCare renovations. What renovations happened in 2019?
Well, what they have done is they changed those 4 bedrooms to 2 bedrooms and 1 bedroom. So they became one bedroom and 1 bath, and 2 bedrooms, 2 bathrooms. So the majority of this building was a former student housing.
Oh, so they converted it.
They're just bringing it to market, converting it to the.
It has already been converted to conventional. It has all the work has been done already. They have already leased it as conventional. However, there's still some deferred maintenance and things that need to be done in CapEx to spruce up the property and really tap into the true potential.
What was done in 2000.
Yeah, no, I know, but I just want to clear the fact that it's not a student housing. It's already been completed as a conventional, and it's operating as a conventional. That was a major rehab.
We talk about opportunity to reduce vacancy post-renovation. What's the thing there?
Well, since we put it in the contract, we already started reducing. I think we may have to change that slide a little bit, because now it's occupied above 90%.
Okay, so we can say that, right? Like it's like, hey, since we put this slide together, we've already raised occupancy over 90%.
Yeah.
Right? So All right, so investment highlight. Oh, that's a beautiful fort and garden. Um, so total acquisition cost is 22.32 million, minimum investment 100,000, 24% projected annualized returns over that 3 to 5 year term. And in this one, the preferred return is 7%, right? And the way that preferred return works is, it's 7% annually, but we do monthly distributions of that return. The distributions do start after a quarter, right?
Second quarter.
In the second quarter.
Second quarter.
Yeah.
After we,
This one because
after we take over once we take over the property.
So
So
this
after we
one,
close on
the
the property.
preferred return, it's expected to start at the end of second quarter after we
Close.
close the property. Okay. So let's look at the overview of the property. That's a beautiful tree. This is a beautiful property. It's got like the cypress, like the old Florida, tree. So it's 160 units, lots of rental space, fairly recently built, 2000, so it's only 20 years old, and it was extensively renovated in 2019. The residents pay electric. What's RUB?
RUB system,
Oh.
is a residential utility bill-back system. Basically, we're not paying, like landlord is not.
Paying for any of that.
Yeah,
So
they're paying initially, but then they're billing back to the tenants.
okay. And lots of good parking, large area. What does it mean by wood with vinyl siding?
That's the type of construction, like
Oh,
wood construction.
Is there any like pluses about that we can talk about? Yeah, it's just pretty standard. Oh,
Maybe you don't have to like constantly paint and things like that.
oh, is that right? Okay.
Yeah, the vinyl siding, and then, it's more,
It's just a construction.
So, okay. So here's our business plan. So phase one, which I guess we've already started executing on, right? Which is to finish leasing it out.
Contract, we already,
So we're gonna do some marketing, put some large signage, do some digital marketing. We want to bring in quality tenants, so that there's not that much turnover. That's not a problem right now, right? Like people, especially since they renovated.
Yes.
Yeah. And it allows for steady rental increases. So we think that like a lot of the foundation work has already been done.
Right.
For that, because it's
put it in the contract.
Yeah.
Elena is taking over, the lead to, how and what type of people put it in there.
And then we'll continue finishing the repairs and the upgrades for the renovation that started in 2019, which includes new paint, redo the parking lot, fencing, new lighting. We'll renovate the laundry room. We'll rebrand it. We'll upgrade the kitchen, flooring, bath in the unit, landscaping, and then we'll do even, the property is beautiful, but we'll do more
Landscaping, we also will work on the swimming pool, area and, creating
Enhancing
like little amenities, adding extra amenities.
cool deck, the clubhouse area.
So we'll focus on the community areas like the clubhouse, the pool deck, and the barbecue grilling area. Okay. So that's good stuff about the property. Now looking at the location. So Tallahassee actually doesn't get a lot of love. A lot of people look at it as just like a student housing type thing, but there's a lot of growth and opportunity in Tallahassee itself. Part of it is the population is almost growing 9 to 10% every year. There's a lot of job growth. So over 10 years, the job growth is projected to be almost 40%. Just in the last year, even through the pandemic, it was over 2%. So Tallahassee did not have a net loss of people, which is comparable to even cities like New York, right? Like that's really great. Even though the US is about half rental and half ownership, Tallahassee has almost 54% rental families, and prices are increasing. I mean, even in the last year, prices and average rent has increased almost by 18%, and vacancies are declining by 2%. So average occupancy in this market is almost 94%, 95%, and so one question I have is we say that rent increase is 4% compared to previous year, and then below we say rent increase is 18% average.
One is over 5 years.
Okay. Oh, okay, so it's 18 over, so 18% of 5 years. Yeah, but 18% in 1 year.
But that market is, even though we're not considering it, we only underwriting based on the 4%. But the market increase is almost like 7 to 8% annualized.
So we want to say that?
Yeah.
Okay, so even though our underwriting for the property has been very conservative with rental increases at 4%, we are actually on the ground seeing rental increases close to 8%.
Yeah.
7 to 8. That's what the current trend is, right, for this year.
Yeah.
No, but in the co-star, you can have.
No, but
five-year projection.
yeah.
Do a $200 by $700. I mean, that's 30%.
Yeah. Tallahassee is a great community for us. We have a number of other investments in that area. We have Oak Park Apartments, where we have been able to increase rent just within the last year for, from 500 rent per original unit to now almost 900 rentals per rehab unit, which has almost generated $2.5 million in revenue. So Tallahassee, continues to be a great market, almost in value. Oh, sorry, 2.5 million in value, and almost a 30% return on investment. And then for our Dior apartments, that the original rent was close to 750, returning 25%. Now the rents are for rehab units they're up to 1,200, which has generated almost 3 million in value and almost a 32%.
Case is the point, we picked up this property through the pandemic,
Yeah, Dior is interesting because we basically bought it during the pandemic, and it just goes to show that multifamily has been resilient throughout COVID and continues to.
One just caveat we have to fix: the Oak Park Apartments, the year we picked it up was 2019, so we're gonna make a fix on that one. It's not 2020.
Okay.
Then yeah, and then just small, rather than original, we're gonna name that classic units, so people understand. They're not original. I mean. I guess they're.
Should we change rehab to something else?
No, rehab is fine. But classic versus rehab, so then
So yeah, Tallahassee is a great experience with. We know the market, we know all the players, we know how to increase occupancy in that market, right? So decrease occupancy in that market and do leases. We know how to market there, and we have great property management in place as well, right?
Yep.
All right, so let's jump into financial summary. Somebody talk to this. 37% return.
Yeah.
Again, we just highlight community.
Yeah. Here also, we were just talking about only 3% annualized increase, even though. Yeah, these projections are based on very conservative level, where 3% increase in revenue and 2% increase in expenses, and it's going to be a great project, where we have like annualized 7, we reaching or hitting year 1, 7% and going up to 8.2% on of return for our investors.
Right, moving on to the financial analysis here. So if you invest
$100,000, you expect to earn 24% or plus annualized return on your investment.
which includes the 7% preferred cash
Yeah.
throughout the holding period, and then the rest of it is delivering that exit.
So one question I have on this is, if somebody invests 100,000 in year 0, what exactly will they get back in year 5?
So they get back 100,000. Yeah, because they get their initial 100,000 back.
So yeah, so that's a simple way to explain this is if you invest 100,000 in year 5, or whenever we exit the property, you'll get
23,000, which includes 100K of the original.
which includes under.
Yeah, that has to be highlighted properly, that you're gonna get a total return of 223,000.
Yeah, but it's not a return though.
I mean, total capital return.
No, you get total cash payout of
Yeah,
220,000,
exactly.
which includes 100,000 of your initial equity.
Oh, so maybe it's another one.
Yeah, the wording could be the cash payout.
A lot more insurance. Yeah.
This is just assuming the exit.
Yeah, assuming the exit that we, exit out at a 4.75% cap rate, that gives us,
This is a basic sensitivity analysis to kind of gauge, depending on how the market will be behaving. We feel that that's where we're gonna exit the property at that particular cap rate. So it just gives you, what the equity is gonna be if you go a little bit higher, a little bit lower, and just to put it in perspective of what all could be, expected, depending on how the market behaves.
So is this in that the per year return is 17%, or no, this is something else?
yeah, that's 17 plus 7,
Plus
when-
that, okay, so
yeah,
17% on the
yeah, 7,
capital plus your 7%.
yeah,
Yeah.
For cash flow. 24%.
yeah.
So Kirky, you've done this before. Who we are, what are our values? I think we've literally had all these slides before, which is, are there any notable changes here? I know we're almost up to 3,000 units if you kind of look at all of our portfolio. But for the purpose of this chat, we can 300, or we can say something like we're getting pretty close to 3,000.
Yeah, 23 plus, plus.
We talked about this is the previous slide as well. We talked about this before. I think the one thing that might be different is when we talk about this one, about the equity group at ERB, well, I think we know we have a good biography on, Puneet, I think we've done a good biography on before. I don't know if we've ever recorded video, a presentation for Stephanie. So Stephanie is one of our closest partners, partner ERB, well, has been in the business since 16 years,
Yeah.
2004. She's started syndicating in 2018 and has experience across retail, multifamily,
Insurance.
housing, and outside of syndication insurance as well. So she's often somebody that we work with very closely in talking to investors about how we can create that. And then in terms of some of our more recent ones, so Kirby, the big differences here would be the Terra Air property, which is based out of Fort Lauderdale, 29.6% annualized return projected. And then prior to that, I think all the other ones we've talked about before, but the Oak Park Homes we talked about before as well, which is located in Tallahassee. So the key thing to reinforce here is that, like even in this property, investors make a 7% preferred return. They do get distributions monthly, which is pretty unique in the industry. We have a very good, strong track record of delivering those returns. We don't need to go too much into this. I think we've talked about these before. Dior might be one to highlight again because it's based in Tallahassee. Is experiencing more than 25% annualized returns. FAQ is the same. I don't think there's any changes here. And I think the one thing to reinforce, whether we do it through FAQ or elsewhere, is that basically we create value for investors in three ways, and guys, keep me honest. One is the preferred cash returns, right, that they get in this property, that would be 7%. One would be the total value that comes from the appreciation of the property, which in this property is 17%, right? That's separate from the 7% that you get. And then for certain investors, we're able to do cost segregation as well. And it requires a little bit more further discussion, but there are opportunities to pass on depreciation of the property to the investors as well, depending on their investor activity. So, right? And that's it. We again go through the disclaimer. Please schedule a free advisory session so we can talk about your financial goals and how the equity group might be able to assist you in them. Please note that you can leverage both the retirement vehicles like 401ks and Roth IRAs and IRAs to invest, as well as any liquidity you might have outside of it. This opportunity will close fast. We're already starting to raise money for it. And so go ahead and give us a call today or email us.
Yeah, it's
And
gaining a lot of traction just with the sheer fact of how Tallahassee is an emerging market,
yeah,
and it was overlooked for so long, and now that people are starting to look, the potential it can provide,
But the
they're
potential
flocking.
location that, is surrounded by three different, states, Alabama is close by, Georgia is close by, Texas, Florida, plus, a lot of tech hubs and still affordable live, and work there. There's 50,000 students, they constantly, they're graduating and they plan to stay the same place and work and, do all those things.
yeah, even compared to some other metropolitan areas in Florida, there's nowhere near a bubble in Tallahassee right now. There's still a lot of opportunity for growth. So, and I think that's it. So we shall stop recording.